Okay, all right. Welcome back, Failsafe family, Failsafe investors. I'm here back in the studio, back in Atlanta where I film. I had a nice time in Chicago on my vacation, so I wasn't able to look into too many companies and do any battle of the brands or any other things. But I have had time to think and reflect on what direction I want to take this channel in. So I did come up with a couple things that I want to contribute to this channel and contribute to your knowledge and help you learn more about the stock market. So I will have some videos coming up rapidly and coming up soon that's going to expand your knowledge of the stock market and how everything works. I'm going to try to do my best to explain it to what a fifth grader can understand. So with all of that said, welcome to another video of Battle of the Brands, and I figured that I can make this a 2-for-1 video. So in today's video, I'm going to be analyzing Apple. Yes, you heard me correctly. Apple, AAPL is the ticker symbol. And we're pretty much going to look into it. And in this video, why I say this is a 2-for-1, is because I want you to understand that Apple would be the poster child for how you would want a company's balance sheet to look, how you would want a company to be ran by the management team, and all of that stuff. And then I'll kind of walk you through what I'm looking at in Apple that kind of excites me about Apple, and why I say Apple would be the poster child for a company that you would want to look into. Now, every company isn't Apple, because not too many companies have a $1.5 trillion market cap. There is only one company with a 1.5 trillion market cap. Yes, you heard me correctly, 1.5 trillion market cap, and that's Apple. So we're just gonna, get right into it, and let's go. Let's go. Hello? Yeah, this is a really bad time, and I'm making a video right now. Well, you can just see it when you see the video. Look, man, I gotta go. We can't talk about this right now. Okay, so right off the back, I'm just gonna give you some basic knowledge about Apple. Apple, ticker symbol AAPL, is selling for around $359 or $365 a share, which isn't bad, especially for a company that has a $1.5 trillion market cap, which makes it the most valuable stock in the stock market to date, in my opinion, that I know of. I can say that. And has a price to earnings around 27. So when you look at that, 1.5 trillion market cap, $365 a share, and has a earnings per share of $12, which is the highest in its sector, Apple looks pretty solid. Now, I'm not gonna say it's undervalued, but I will say it's almost fairly valued. So I wouldn't say it's definitely not overvalued, and I'm going to explain why, but it's close to being fairly valued. And remember I did a video on when to sell a stock, and I said you probably want to sell a stock when it becomes near fair value. It's close to it, but it's not there. So even though Apple is selling for $364, $365 today, it's still undervalued. So you're still buying it at a slightly of a deal. And I'm gonna explain to you why. So first off, let's look at all the products that Apple sell. So they have the iPhone, they have the AirPods, they have the Apple Watch, they have the MacBooks, they have the iMac, they have the iMac Pro, they have an Apple credit card, they have Apple TV, and everything is in-house. They pretty much sell all of their own products. They own all their own products. They have Apple stores, and they have customer loyalty. They have their own ecosystem. So with that being said, it's remember how I kind of reference companies like castles? If you walk into Apple's castle, you're pretty much there for the long term, because if you own an iPhone, if you own a MacBook, if you own AirPods, you can't even get an Apple credit card without owning an iPhone. So it's once you're in there, you're kind of locked in. It's kind of like going to Six Flags. Once you're in there, you kind of have to pay that toll. You have to pay that premium price for their products, and I kind of get it. I understand. I myself own an iPhone. I have AirPods. I have an Apple Watch. So I get it. I get the paying the premium for a good product. I mean, let's just be honest, Apple is a good, pretty solid product. I've owned a MacBook. I've never had to pay for like antivirus protection or anything on my MacBook. I love Apple products, and a lot of people will say that they own Apple products. And let's be honest, even if Apple closed down all of its stores today, they will still be profitable. And the truth is in the pudding, because they did. Like, from like March and April and May, all of Apple stores were closed and they were still profitable. Actually, they went up in value. So Apple is actually selling at an all-time high right now, even though all of its stores were closed, because it's in the tech sector. People still was using Apple products. They're coming out with a new iMac and MacBook Pro and all of that thing. They're still releasing new iPhones. They plan to release an iPhone with the 5G. So you got to look at what's going on with the company. Apple is still trending. It's a very popular stock. A lot of institutions own Apple. A lot of retail investors want to buy Apple when they can afford it. So you have to look at that, which makes Apple not only attractive, but even at the price it's selling at, it's affordable, because Amazon is selling for like $2,000 some a share. Not everyone can afford that, but it still doesn't have a market cap that Apple has, and that's probably because it has less shares than Apple. But I don't want to get off track. I'm not talking about Amazon. We're here to talk about Apple. So that's the products. That's what you get when you buy Apple stock. So you get all of those products, you get a piece of that company, and they have great management. I have to give it to them, like even customer service. I do pay for Apple Care on my products. I'm not trying to give you like my life story, but I'm just being honest and telling you my experience with Apple, because that helps when you're investing. You know, if you are familiar with the product, then you will be more likely to understand it and then understand what you're getting for your dollar. So you get all of that for Apple, and you're paying like $27 for every dollar of earnings per share. And like I said earlier in this video, they have $12 per share. Like, that is crazy. And they pay a dividend. They have a dividend yield of 0.9. So even that is amazing. So Apple is a pretty good company, but I still haven't like made the case for them as the poster child for what you would want a company to look like and how we would want a company to be ran. Because you have a lot of companies that have you have a lot of companies that are mega caps that doesn't have the cash on hand that Apple has, that doesn't bring in the revenue that Apple has, that isn't being innovative the way that Apple is being innovative. Like, Apple is switching from using Intel processors to using its own Apple processors. So that's even going to be big, and that's going to have more revenue for Apple, because that will probably drive a lot of either existing customers or new customers to buy the new Apple product, because now you have an even better processor in their MacBooks that works with that product. So Apple is just all around good on it. And I'm not like trying to be like, hey, Apple, that's it. I'm just giving you my opinion on this company, and I'm trying to stay as objective as I can be. But now it's kind of where I'm going to make the case for Apple, and it's really going to reflect in our financial statement. So just stay with me. I'm going to show you the Apple's financial statements, and then I'm going to let you be the judge at the end whether this company is still like fairly valued, undervalued, or even if you want to say it's overvalued. But I'm just going to say, if you do say that Apple is overvalued, don't say because the price of the share is too high, because that does not represent the company. So just going to say that. So let's go to the financial statements. Okay, so when we look at Apple's financial statements, we're going to start off with the balance sheet. Now, this is what you would want the company that you're investing in. This is how you would want their balance sheet to look. So Apple generated $260 billion in revenue in 2019. They had $100 billion in cash on hand. And when you look at their current assets, they had $162 billion in current assets, because like $45 billion was in loan receivables. So that's money that they haven't received yet, but will get within 12 months or within this year. But it still equals up to $162 billion, and their current liabilities is $105 billion. So that's great. The $100 billion alone in cash is amazing. It's amazing. I have to tip my hat off to Apple. $100 billion. You have companies that's making more than that in revenue, and can't even keep a quarter of that. So then we look at the assets total, meaning like all of the assets, if they was to like totally liquidate the company, it's 338 billion. And then when you compare that to 248 billion in total liabilities, like everything that this company owes, that is a really, 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 really good balance sheet. So then when we move on to the income statement,